Wall Street. The very name is synonymous with the heart of global finance, a place where fortunes are made and lost in the blink of an eye. It conjures images of towering skyscrapers, aggressive traders shouting over the din, and a relentless energy that never seems to fade. Here, the hum of global capitalism is a constant backdrop, echoing through the marble halls and digital screens. Thousands of miles away, Mumbai's Dalal Street pulses with its own unique rhythm. It's India's vibrant, chaotic financial hub, where tradition meets ambition on every corner. Today, these two financial worlds, once separated by geography and culture, are rapidly merging, creating new opportunities and new tensions. A quiet, monumental shift is underway. Global finance titans, with their vast resources and influence, are buying into India's future. With trillions at their command, foreign investors are acquiring stakes in India's top companies, blue-chip giants, innovative tech startups, and everything in between. This isn't an invasion with armies or weapons, but with algorithms, high-frequency trades, and lightning-fast electronic transactions. The rules of the game are shifting as India's fortunes become ever more entwined with the unpredictable tides of global markets. Is this surge of foreign capital a golden opportunity for growth, or could it be a subtle modern form of economic colonization? The answer isn't simple. It's a complex story about power, ambition, and the uncertain future of over 1 billion people whose lives are being reshaped by these forces. As global traders deploy advanced technology and immense capital, the line between opportunity and invasion grows ever more blurred, raising questions that have no easy answers. The battle for Dalal Street has begun, and its outcome will not only shape India's destiny, but could define the future of global finance for an entire generation. India's stock market has transformed from a regional player, once overshadowed by the world's financial giants, into a force that commands global attention. Today, it stands proudly among the world's top 5 by market capitalization, rubbing shoulders with the likes of New York, London, and Shanghai. This remarkable ascent is not just about numbers, it's about a new confidence and ambition on the global stage. This explosive growth reflects a fundamental shift in Indian society. Millions of Indians, empowered by affordable smartphones and growing financial literacy, are embracing equities and mutual funds like never before. The democratization of investing has opened doors for people from all walks of life, from small towns to big cities. Retail participation has given the market a strong, resilient foundation, making it less dependent on a handful of large players and more reflective of the nation's collective aspirations. At the same time, India's vibrant startup boom has created a wave of new investment opportunities, drawing in both local and global investors eager to be part of the next big success story. As the market matured, foreign institutional investors took notice. What began as a trickle of foreign capital is now a flood, with billions pouring in each year, seeking growth and innovation. These massive inflows have driven stock prices to record highs, fueling expansion, innovation, and a sense of optimism that's palpable across the country. The combination of a booming retail base, dynamic startups, and surging foreign investment has made Dalal Street a vital engine of the Indian economy, powering growth and opportunity. It's where global capital meets local ambition, creating a dynamic, sometimes volatile environment that's constantly evolving and full of potential. Dalal Street is now irresistible to the world's biggest financial players who see India not just as a market, but as a new frontier for innovation and prosperity. The new rulers of Dalal Street are the modern Maharajas of global finance, colossal asset managers and sovereign wealth funds. These institutions, with their vast resources and global reach, have become the power brokers shaping the future of India's financial markets. Their decisions ripple across continents, influencing not just stock prices, but the very direction of India's economic growth. American giants like BlackRock and Vanguard oversee trillions of dollars in assets, making waves in India's markets with every move. Their sheer size means that even a small shift in their investment strategy can send shockwaves through Dalal Street, affecting millions of Indian investors and companies. These firms are now among the largest shareholders in India's most iconic companies, from sprawling conglomerates to cutting-edge tech innovators. Their stakes give them a seat at the table where India's corporate future is decided, and their influence is felt in boardrooms across the country. Foreign institutional investors now hold about 20% of India's stock market value, 1 rupee in every 5. This unprecedented level of ownership means that global sentiment can sway the Indian market in an instant, making it more connected to the world than ever before. Beyond the US, sovereign wealth funds from Singapore, Abu Dhabi, and other nations see India as a long-term bet. They're pouring billions into infrastructure, technology, and consumer sectors, betting on India's growth story for decades to come and helping to build the foundations of tomorrow's economy. Their strategies often align with their home country's geopolitical goals, adding a layer of complexity to every investment. These funds don't just seek profits, they also advance national interests, making their presence in India both an economic and a diplomatic force. As major shareholders, they influence corporate decisions, board appointments, and mergers. Their voices carry weight in shaping company policies, governance standards, and even the direction of entire industries. Their buying and selling can create or destroy billions in market value overnight. A single decision to invest or withdraw can trigger market rallies or crashes, impacting the wealth of ordinary investors and the stability of companies. These global players may operate from afar, but their impact on India's economy and its people is direct, immediate, and profound, shaping the nation's financial destiny in ways both seen and unseen. Wall Street's entry into Dalal Street was a calculated, years-long maneuver. Global investment banks set up sophisticated operations in Mumbai, replicating the trading floors of New York and London. They recruited top Indian talent from elite schools, offering salaries local firms couldn't match. These hires brought local market insight integrated into global strategies. The real game-changer: advanced trading algorithms, programs that execute trades at lightning speed and massive volume. This technology gave foreign firms a decisive edge, dominating algorithmic trading. Today, over half of all trades on Indian exchanges are algorithmic, mostly controlled by foreign-backed institutions. The market's daily direction is now heavily influenced by these automated systems. This quiet technological takeover has fundamentally altered Dalal Street's dynamics. For the average Indian investor, global finance's influence brings real consequences, most notably increased volatility. When foreign investors buy, markets surge. When they pull out, crashes can follow, often triggered by global events far from India. This volatility affects millions investing through mutual funds and SIPs, making portfolios swing for reasons unrelated to Indian fundamentals. The actions of a few powerful foreign players can trigger herd behavior, forcing domestic fund managers to follow suit. The financial well-being of Indian investors is now tied to unpredictable global capital flows. Building wealth through the stock market remains possible, but the journey is more turbulent. Investors must recognize their fortunes are influenced by both local performance and international trends. The fate of their savings is increasingly linked to decisions made in distant financial capitals. The deep integration of foreign capital is a double-edged sword. On one side, billions in foreign investment fuel India's growth, building infrastructure, funding innovation, and creating jobs. Foreign investors also demand higher standards of governance and transparency, raising the bar for Indian companies. This transfer of best practices professionalizes Indian industry and aligns it with global standards. But the flip side is the risk of surrendering control. Heavy reliance on foreign capital makes India vulnerable to sudden outflows, causing instability. Key decisions affecting millions can be made by fund managers abroad, with little accountability to India. The price of capital may be a loss of economic sovereignty. The challenge: attract investment while retaining control over India's destiny. Striking this balance is the central task for policymakers today. At the heart of Wall Street's dominance is algorithmic trading, sophisticated computer programs making split-second trades. These bots analyze data and execute millions of trades daily, shaping market direction and amplifying volatility. The old image of traders shouting on the floor is gone, replaced by silent servers in data centers. Global firms' investment in technology gives them a massive edge, creating an uneven playing field. Algorithms reacting to the same signals can trigger flash crashes, sharp drops and recoveries with no change in fundamentals. For long-term investors, this volatility is bewildering and costly. Competing against supercomputers, retail investors can feel outmatched. Regulators are trying to keep up, but the ghost in the machine is here to stay. India stands at a financial crossroads, needing global investment but also strong safeguards. The challenge isn't to stop foreign capital, but to manage it wisely. Regulators like SEBI must create robust rules to mitigate risks from hot money and algorithmic trading. Strengthening the domestic investor base is key. Financial literacy and long-term participation can stabilize markets. A confident domestic class acts as a shock absorber during global uncertainty. India should demand transparency and accountability from foreign investors, favoring long-term commitments over speculation. The goal: attract patient capital invested in India's growth story. India must engage globally from a position of strength, continuing reforms and building resilient institutions. The aim is a symbiotic relationship, foreign capital on India's terms. Securing a prosperous, independent financial future depends on getting this balance right. Wall Street's quiet takeover of Dalal Street is more than a financial story. It's about power in the 21st century. Capital flows reflect geopolitical dynamics and can shape realities far from their source. As India integrates globally, it must stay vigilant. Foreign investment brings growth, but also risks loss of autonomy. Overdependence on foreign sentiment can distort the true health of India's economy. The responsibility lies with India's leaders, regulators, and people to ensure markets serve national interests. Building strong domestic institutions and fostering long-term local investment is crucial. India must set the rules, not just play by them. The final chapter isn't written. India's choices now will decide if Dalal Street remains master of its destiny. The goal: a financial future that's prosperous, resilient, and truly Indian.